So if you understand how this simple thing is being created in the market, you'll be able to make very easy trades and find your way to profitability. Let me show you. This is the fractal, the market fractal that repeats itself every now and then in the market. It's not something that is every day, but it happens frequently that if you are trading only a one pair or two pairs, you'll be able to make do with it. So we have identified this low here, and this becomes our major low because of this high being taken out, and then we wait until it causes a boss here. If this break of market structure has happened, then we identify this as our high, and then we wait for market to create a low here. If this low is created, it only becomes valid after it has also taken at least one high. But before that, you have to identify where it wants to pull back into. It will always pull back into this zone here, between this and that, to try to pull back into that zone. So you wait until it pulls back into that zone. Then you find your liquidity within that zone. At that point in time, the market will try to give confirmation or just tap on the liquidity and then drop. So the liquidity here will be this high that was able to cause the break of structure from here. If you identify your low, the high that will break that structure low is the liquidity. So this is as simple as you can see it. I'm going to show you this, which has happened in Euro USD just last Friday. So if you understand, or if you understood what I just showed with this drawing, now let's apply it to the charts here. We can see that this high here, this low here has been able to take out this high, and then all these highs were being taken, and liquidity has also been taken from this high. Then you have to wait until market comes to break that low, which is this low here. If it breaks it, trace price all the way up to see which high has caused the break. Sometimes they will create a high here and then another high. If the highs are all at the same place, it doesn't matter. Just take the highest high here, and then you have that as your liquidity. We broke it, and then we created this low here. This low also took out this high and then this high here, so it makes it a valid major low. But all you want is market to trade back into this zone here. This high to this low is the zone that you are going to wait for market to trade back into it, and you want your liquidity to be lying within that zone. In this case, it was very big, but if you are able to identify the low that broke it, you will know exactly where to look for the liquidity. And you can see this is our liquidity as I have already identified it. And then we have market to trade back into the liquidity. Taking out that high, we have market to trade rightly directly to the downside. And you can always target the major low as your target, and then you put your stops above this previous high that is here, and that is it. You can use the liquidity as confirmation to enter, or you can use the same confirmation in the lower time frames that mostly happen around this, and then you have your trade to the downside. It's always like this, and you do not need to be able to identify all the market structure that has happened all this way. All you have to do is to identify this, and you are able to take at least one trade, and then all you need to do is to repeat the process over and over again, and you